The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me this evening. And we are running 2 minutes late today, which is my fault. But I thought that Terry did such a wonderful job on our banner. You might like to have spent a few minutes soaking it all in. And today's webinar is called Trading for Blood. Now, I should also say good morning to our friends in Queensland. And you guys in the States have come off daylight saving now, so spring break heralds that in. Wonderful, nice weather for you, I hope. Would somebody please just type into the question box, Norbert, you'd probably be first. How's the volume over there in far north Canada? All right, you getting it? Stand by. Here he is. Great. What a man. What a man. And you've got some nice weather coming on as well after you've survived that brutal winter that you have. Boy, I mean, talk about iron men. I'm absolutely not sure why people live in very, very cold climates, but I'm allergic to it. I really am. And, of course, I should say good afternoon to our friends across the ditch in the land of the great white cloud, where you've got some sanity back in government after some number of years of absolute socialist insanity. And good luck to the new government there, that they can undo some of the stupidity that's been going on. And New Zealand is very, very close to my heart. We went over there in 2000, as I recall, and my mother, my wife, I should say, I'm getting my relatives mixed up, is a Kiwi, what we call people from New Zealand. We call them Kiwis. That's their national bird. And both of her parents were very elderly, and if one wasn't in hospital, the other one was, so she was concerned about all that. So I said, well, we'll go over. We'll go over 3 months, and we can give them a hand. So we did that, and we finished up staying for 12 or 13 years. It is a most wonderful country. It is not now, because it has had some years of socialist insanity with the lovely Jacinta. But when I was over there, and as it will be very soon again, it was one of the most wonderful countries on earth. It's so beautiful. It's green. It's lush. The people are delightful. It's really a wonderful place, and it may be we will go back there at some time as well. Okay, so today, trading for blood is actually not a new invention of the words. That actually came from a backgammon book that I read, maybe 40 years ago. It was called Backgammon for Blood, but it raised the spectre that things that may be casual can in fact be very, very serious and very deadly. And I'm in the process of teaching Danielcode to my son John, and I was thinking, what's the most important requirement for traders, particularly traders who are going to learn Danielcode and aspire to and become super traders? Now, by super trader, I mean someone who is knocking off 2, 3, 4, 5, 600% per annum on the margin. And those, of course, are only and exclusively graduates of the Danielcode time trading tutorial. And thinking about what's the most important quality in someone who's aspiring to be a professional trader, and I think the answer is actually tenacity. I was moved by Justin's story, and those of you who are with us very regularly. Anthony D has arrived. G'day, mate. Cold and windy in Chicago. Justin's story was that he'd been with us for 8 or 9 years. That he started to have a play around with Danielcode. In those years, he'd gone on to trade stocks, options, anything else he could. And he got put off by the Danielcode because he said, I heard some murmurings about Bible verses. And as he said, well, not for me, I'm out of here. Fortunately, his father, Hank, who was a member before Justin, impressed on him. He'd actually seen some of my trading. He said, you got to persevere. I've seen this guy's trading. Then, of course, we had a number of years with Justin where he'd do a bit of work and he'd shoot me an email saying, can we have a chat? We'd set up a go-to-meeting. We'd talk about his latest bit of trading. And he was what I would call a good trader, but he hadn't made the leap to super trader. And some of our clients don't. I have to tell you that we have a number of people, not a big number, but a significant number, when they find out the first time about trading time, creating and trading Danielcode time signals, they're so excited that they're gone. They're off. They're trading real money. They've never finished the course. They haven't got the discipline of going through extensive paper trading and then checking that paper trading with me again and again and again. And so some of them never actually get the full benefit of the tutorial, but I guess they're doing well enough for them. And even an ordinary Danielcode trader is going to be better than almost all of the rest of the competition. But it's that leap to super trader status that excited me so much. And those of you who missed Justin's webinar, we'll be posting a link to it very shortly. And it's this just tenacity that he's just got into markets. He's traded so many markets with Danielcode signals and rules, and all of a sudden it's happened. It's just boom. He's made that jump from a good trader to a super trader. And I think that's the most important question, is tenacity. You don't need any real ability to learn Danielcode. If you can tell red from blue and you can count to 3 forward and backwards, I can make you a super trader. And what's more, if you're going to do a Danielcode tutorial, it comes with my guarantee that I will get you trading as well, or very close to as well as the examples from some of our other clients that we've shared with you in the recent past. Okay, so let's move on now. And as you know, markets are rational, orderly, and sometimes predictable. And the Danielcode is a set of proprietary market ratios that control time and price in all markets. It's pretty extraordinary stuff. Boy, we've got a good roll-up today, guys. Just excuse me, Akshay's arrived. Anthony DD's here. David, there's a new one for us, says Eric. That's grand. Okay, let's see. Yep, here's wonderful Graham's with us. Greg from Colorado / Texas, not sure which. He's a wealth manager and a wonderful chap. He's with us. Greg Palladini from California is also with us. Keith is with us. Marcel up in the coal country in Canada. Marcel, bonjour, or bonne nuit, I think it is for you. A very French Canadian wonderful chap. And I taught him a Danielcode tutorial many years ago. What we teach now, Marcel, is much more advanced, quite different to that. But it's grand to have you here. You've been a wonderful supporter of Danielcode for many years. Mark L is with us, as I usually say. There's no party without Mark. Here he is. Good to have you with us, my friend. I hope your trading is great. Miles is with us. Good to have you, Miles. Many Peters and many Tonys today. Quite a lot of you. Nice. Welcome all of you, every one of you. Nathan's with us. Norbert, of course, we know, up in the coal country in Canada. Peter Mack, who's not a day trader. Pietro, it's good to have you with us. Rob H from New Zealand. He's a very good trader and a serious economist, an analyst of markets. Toddy over in California is with us, of course, and William Jamison. haven't heard from you for a while, William. I'm thrilled to have you with us, and welcome. So let's move on, folks. And here we are. This is going to talk today about current market systems, current trading results. You should all be thrilled. You've made an awful lot of money this week. If you haven't, let me know, because you've got a problem. Markets have just been sensational, pretty much for the whole of this quarter. They've been wonderful, and creating and trading Danielcode time signals, the best trading system I know. It's quite extraordinary. And that's the one where these folks have been telling you they've been making multiple 100% on a margin. This is something new for you folks. I know a lot of you that are interested in trading, you're a bit shy, you've got questions, you're not really sure where to start, you're not really sure what we offer in our various courses. So what I'm doing now is offering all of you a free consult, and if you would like, simply email me, tell me the dates and the times that would suit you, bearing in mind I'm in Queensland, Australia, so I'm available for those consults between 8 p.m. and 3 a.m. US Eastern Time. Also for you guys in Europe, some of you may need a slightly different time. In any way, we'll work it out with you. But simply email me with your preferred date and time slot, and we'll set up a 1-hour video meeting on GoToMeeting. I assure you it's quite painless. You don't have to show me your face. You can be completely anonymous behind the screen, or if you like, and you'd like me to show me your face, I'd be delighted to meet you. It makes everything so much more personal, doesn't it? So, the common questions: how much money can I make? How long will it take? All those sorts of questions. And while you're thinking about this, watch what our clients say by visiting the Danielcode.com. Terry just kindly created this for me this morning, my time, your evening, and an hour after the webinar finishes, this will be posted on the website with 3 recordings of what our clients have said about what they've learned and their trading experience with Danielcode. So the new one that has just been done recently is Scott and Amy, and goes on to Greg Palladini and Mark L. and all our famous champions, and that will be posted together with the other 2 videos of client testimonials, if you like, from Mark L. And from Justin from the Hunter Valley in New South Wales, Australia. They'll be posted on the website an hour after this webinar finishes. So if you are interested in trading, you aspire to be a serious trader, send me an email. Happy to chat about it. In fact, happy to chat about anything, with the proviso that my knowledge, apart from trading, extends to horse racing, sailing, big boats offshore, and also rugby. So that probably limits most of you Americans, but I know Chip and his big mate. We haven't seen him. He was a wonderful rugby player. Anyway, there you are. If you'd like to have a chat, don't sit there wondering. Send a chat. Sometimes it's easy to just talk about things, what your aspirations are, how you'd like to go about it. Let's make this a way to break through so many of those clouds that stop you from ever getting to do what you want to do. Okay, so trading in the March quarter has been simply amazing. This is a chart of the S&P. In fact, this is our moon cycle chart, and the diamonds are where we got a reaction from one of the common cycles that run under the lunar series, one of which is new moons and full moons. The other, which are the circular black dots, is the new moon. Circular yellow dots are the full moon. A bit hard to see, I know. Can't be helped. That's how it comes up here. And then on top of that, A and P are for apogee and perigee. and the other numbers there are the first and third quarters of the moon cycle, running from the start. It's what we call a synodic month, when the Earth and the moon, I should say, and the sun are both on the same side of the Earth. That's how you start counting a synodic month at that point, and it runs until the moon's run through its various cycles and returns to that position again, which is also the new moon position. But have a look just simply. I've talked to you about this stuff over the years, and I know some of you are interested, but almost every turn has come at or within 2 days of a lunar time cycle. Of course, every one of those turns has happened on a Danielcode turn cycle that we've notified you as either a TO3 or a TO3 plus, or in the 6S program. We don't miss very much at all, I can tell you, as you'll see today. So that's been marvelous. This, what I want to take you back to, folks, this is a long-term chart of bonds. This is our 24-day chart, where every bar is 24 trading days. And I've shown you this over the years. We've tracked it all the way up to the high, which came right on a Danielcode time cycle, and the plunge down, we've sort of commented and told you where the next level of support would be, all the way down. And as you can see, it's found a bottom now right on the 212.5 trading periods. And don't forget, we're talking about a 24-day chart for each bar that covers a very, very long time. And as you can see, this market's recovered one of those angular, those red lines, excuse me, red line, dotted lines, above and below the thicker red line, which is the median or the mean. It broke through that final support. We actually had it going down to about 114.21, as you can see, and it broke through that, found support at the very next level and time cycle, bounced back, and now it's trying to consolidate on top of that particular dotted red line. Now that dotted red line is 1, 2, 3, 4, 5 standard deviations from the mean to the downside. It's a big deal, isn't it? The high came in at 2 standard deviations above the mean, and we expect it to get at least 2. So the result of any move is equal and opposite. It's the highest probability. In fact, it went much further. It's now trying to hold support at that slightly higher level off the lows. Let's have a look at a closer version of that. So as you can see, over the years, that's got pretty crowded with all of my thoughts and comments. This is just a blow-up of what you've seen there. But it's very important because, as I've told you, this, particularly this long-term chart of T-bonds, is showing you the conflict between what the Fed's trying to do and what the bulls, perma bulls pretty much, in the market are trying to do. And remember, for US T-bonds, it's the inverse of price. In other words, with this market, price going down means yield up, price going up means yield down. So the Fed wants this thing down, and it wants to keep it down. And the next one I'm going to show you is what's in front of them. In fact, for all of the commentary, drama, and heartache about increased interest rates, particularly on housing, which is pretty much global at the moment, in reality, the Fed has only actually tightened to the level of April 2013. And I know that for a fact because we came back from our sojourn in New Zealand back to Australia in April 2013. And when we were looking to buy a house fairly promptly over here, I saw what the rates and percentages and what have you were. And really, all the Fed's done is get down to the sort of settings, the interest rate settings that we had in 2013, and they weren't onerous. Now, of course, they're considered the end of the world because we've had this huge, super long period of very, very obliging low interest rates. And of course, compared to those interest rates, which too many people assumed would last forever, they're getting a belt in the head now. But it's not really anything like as savage as it could be. Now, if you bear in mind that a large part of the inflation problem is caused by madly incremental government spending. It started off with COVID. Governments all panicked pretty much, and in an attempt to restore life to the various economies, they threw money at it. Too much money everywhere, all the same. The star performer, of course, was Joe Biden, who don't think he understands economics at all, because I'm not sure he understands much of anything now. And boy, how did they get him up for that State of the Union address? He was firing like a very, very angry man. Nonetheless, he did a great job. He was well rehearsed and well trained for it. But they have Democrats, and Biden in particular, I think they just have no limits on what they want to spend. It'll just it's tax and spend. It's tax and spend. So they're doing the spending part, and they keep promising to do something about the tax rates, but there's been no significant increase in tax rates at all under Biden, and that's the reality. This chart you're looking at, it's still the 24-day chart, and it goes right back to February 2000, and that's what was called the Volcker shock. You can see that massive gold bar there that the market just gapped down month to month, and Volcker was brought in to trim or to tame a very mad and roaring period of inflation, and he got the market to cool off a little bit, but obviously making no impression on inflation. So we then got what's been called the Volcker shock. He slammed this thing right down into those lows in February and March of 2000. Well, have a look at that setting as the maximum historically that we've seen to attempt to trade the markets to handle bad bouts of inflation, to wean them off those behaviors that keep the market in that state of inflation, which it still is. And it's that massive, massive spending more than anything, of course, with the shock of COVID, so many people not working, being locked up at home by various government decrees, etc., that caused it all. But it's still there. Is the Fed going to do more? Well, they've been very tentative, haven't they? They're really terribly scared of spooking the market, and they're not going to do that. They're just being incremental and continue to give out mixed messages about how serious they are. But just for your information, you can see if they lose faith in their ability that they are doing enough to control inflation, you can see where that next hop down goes to. And that will be really interesting. Okay, so I've been telling you how good markets are. You should all be rolling in money, literally. Have a look at this. This is copper. And what I'm showing you is a trading system, a very unsophisticated trading system that I developed many years ago, perhaps 30 years ago, 25 years ago at least. And it's quite simple. It simply does this. What it does, it has a line on it, which it's called DCLL lowest low, offset 4. Well, you've got to remember that's actually offset 3. The way the coding works, it's got to start from somewhere. So the code actually counts its beginning point as 1, and then the next 3 bars is 2, 3, and 4. So it says at the top there, DCLL offset 4 high and low. Beautiful cup of coffee, folks. It's still morning for me. And all this does quite simply is as it breaks through the upper line, you get long. As it breaks through the lower line, you get short. Have a look what it's done. This is a period of 134 trading days. Starts from September 23 or thereabouts. You've had 27,400 in wins, 5,500 in losses. That's 21,800 net. Doesn't include slippage, doesn't include commission. But for a paper trading exercise, it's spot on. And that gives you a 60% win in 134 trading days. So that's 54% of the year. So roughly double it. I use 1.95 to be a little on the side of the angels to get the dollar return for a full year. And you've got 41,500 odd, and margin at the moment is 4,400. So you can do the math. It might not be 900, that might be closer to 820. In any way, it's massive. Now, have a look at the arrow down to the bottom, which you'll find interesting. This market had two rollovers, very close to each other. And I remember that because I moved all the charts on the first rollover, and a few days later it was like, crikey, we're in the wrong month. And you can see that little light blue diamond at the bottom with the letter R, and it stands for rollover. So this market rolled over twice in very close succession. And I actually don't recall having seen that before. You may have. So this, as I said, is a very unsophisticated program. It simply just, as it breaks the high, the line above it, the coloured line above it, it goes long, the other way it goes short. And what is missing here is a stop loss protocol. I'm not using any stops at all here. I'm just simply showing you what the market does, up and down and up and down. And looking at this, it may, no, it looks all right. It may have overstated the profit. I can see that first number of 1,325 looks to me that could be a loss, not a profit, which would change things a bit, but not materially. The point is I'm trying to show you how simple trading can be. It says trading is easy. Well, to most people, it's a complete mystery. And it's like everything in life. Things look incredibly hard till you know how to do it. If you showed a book to someone who hadn't learned to read, it would just be a bunch of indecipherable gibberish, wouldn't it? But once you know, it becomes easy. And of course, I've been doing this for over 30 years, and I do know a lot about markets. But I want to share this with you. This is a simplistic, easy solution. It may not have operated as well as this in the previous period, but we are having, as I've said, a wonderful, wonderful trading opportunity at the moment, all through the March quarter. It's fabulous. These are the sort of numbers that are being generated. But think for yourself about a suitable stop-loss regime. If you want to try this out, you'll find it quite wonderful. Okay, so there you are. There's a free trading product for nothing, and it's a multi-100% on margin. So that's where the world we live in at Danielcode, and it's simple for you to learn to do this for yourself. You simply have to say the magic words, I want to do the Danielcode trading tutorial. It's that simple. Let me know. We'll handle everything from there. Okay. Our algorithms have been performing with great interest, and we've had them free to you for months and months, and just last week, I think, they've gone behind the paywall, and they're now part of the DC website Pro package. That's the $249 a month package where you get the TO3 signals, the TO3 plus signals, and the members charts and forum as well. But you can see this is soybeans, which has been terrifically well, isn't it? You've had a $2,900 run down, a 23.5 run down, and we're now sitting on. I think I can't place these numbers where I would like to place them, so I'm sorry for that. I don't know if Trade Navigator will find a way to move them to the other end of the bar, but they can get quite congested sitting on top of the bars. But I think we are showing 2100 on the current rally, and there's a loss in there that I haven't put on. I just want to show you how marvelously this tool of Danielcode #1 algorithm navigates counter trends. It's extraordinary. It's very, very good. Have a look at this. This is Bitcoin. For you, Greg Palladini in particular. Greg's interested in Bitcoin. And remember, folks, this is a futures chart. And the Bitcoin futures is actually comprised of 5 Bitcoins. And why they did that, I don't know. Nobody told me or consulted me, nor should they. But I think they did it to be so scary that only seriously big professional traders would trade it. And that's why you've got a margin on this market of about $60,000 the last time it looked. There is a mini contract, and if you'd like me or prefer me to start showing the mini contract, let me know. This is a pretty tough piece of trading, but what a wonderful tool this is. Have a look how it's managed to just sail through all of the counter trends, and it's now sitting at 141,000. It was sitting at about 150,000 yesterday, which shows you how volatile this market is. This is Euro USD, one of our Forex pairs, and we've had an ongoing glitch with Trade Navigator about the values on this particular tool I'm using. I do apologize. They've actually told me how to fix it, and I haven't got around to doing it. But those of you who are Forex traders will know what the number of pips are, and you will be able to ascribe a value to it. This is gold, which has been fantastic, hasn't it? It's just gone up and up and up, and we're getting a little bit of a correction now, but it's sitting at 14,000 now. It was up well over 15,000 at the high, and boy, it's markets that are trending. This is the way to trade them. So we have a tag on the Danielcode website that says algos, and they're updated weekends and Wednesday. And other days, if there is a new setup bar, either to go negative or positive, as the setup bar, well, exceeding or going past the end of that bar would give you the change of trend signal. I'll put a note about it in forum. So if you're interested in these algos, make sure you look for them on the website, and then make sure you look at forum to see if there's any additional comment. I found this fairly interesting, folks, and I hope you will. The most important movement on this chart of, I was going to say in recent times, but time runs away when you're having fun, doesn't it? Back in 2018, 2020, were those 2 counter trends, the second one of which was the COVID flash crash. That lasted, I think, for 23 days, the shortest flash crash in history. But both of those corrections on the high of the COVID flash crash and the swing high immediately before that, they came on the end of 59 cycles running from the 2007 high, the 2009 low, and the previous low, which was the end of the dot-com crash. And they've been pretty magnificent, those cycles. So I just want you to be aware we're in a cycle now that expires on April the 8th. Remember that every bar here is 24 days. It's a Danielcode long-term chart. And that time cycle is expiring, may have already, but it just, the period is the 24 days up to April the 8th. Okay, so our Danielcode tutorial, folks, will make you a super trader. This is the link to the curriculum, and we've got some very encouraging words from Mark L. And from Greg Palladini. Both of those gentlemen are with us today, and they are both super traders. Greg's also a wealth manager and was kind enough to make those comments. Mark says, I've said it before and I will say it again, the Daniel Code and John Needham have changed my life. And that is, I guess you can't make a stronger statement than that. What's particularly interesting about these comments from Mark and Greg is they both did their time tutorials, the Danielcode time tutorials, back in, I'm going to say, 2015, 2016, thereabouts. And they're giving these testimonials 8 years later. So they've seen a lot of markets going on since then, and obviously they're very comfortable that trading Danielcode time cycles has continued to be just as attractive, just as safe, and just as profitable as it has been right through the time. I've actually back-tested the time cycles on the Dow back to 1924, and I can tell you nothing changed. It's always been there. It has to be, because the Daniel Code is actually the DNA of markets, which is a silly system unless you think about it. But that's the truth of it. So we've got a special tutorial deal for you for the March quarter. Normal price is $7,500. If you can start your tutorial in March, I'll give you $1,000 reduction. And for the first 3 students to email me and book your tutorial at jneedham@thedanielcode.com, and you can start by 25th March, I'll give you a further $500 on top. So this is the best deal that we have ever offered. And if you're one of the first 3 to book your tutorial, you are getting it for the much discounted price of $6,000. Act now. This is the best deal we've ever offered. We will never offer a better deal. And set yourself and your family up for life. It's not hard. You just have to be brave and have tenacity. If you have tenacity, you can tell red from blue and count 1 to 3 forward and back. I can make you a super trader. And the super traders, I'm talking about those multi-100% results. And what's more, if you fail to be competitive, let's say within 10 or 15% of those gentlemen, I'll give you a refund. I know how effective this stuff is, and I know if I teach it to you and you do the work and you have tenacity, you will get the results. There's no doubt about that. I've been doing this for a long time. Okay, so folks keep talking about win percent. I had an email from a young chap, I assume he's a young chap, last week saying he'd just seen the video recording of Justin, superhuman effort of market research, which, as he said, he took the very worst way he could possibly do it, and then we went from there. So this young gentleman had seen that. He had no comment about the profit percent, which we know, as he said, 150%. He was thrilled with, but that's not good by Daniel Code standards. We can find much better returns than that. But this young gentleman was very disappointed that he didn't have a very impressive win percent. Well, the win percent is a function of which of our programs you're talking about. The simplest way to trade anything is if you can see or learn from someone who can create a valid buy or sell signal. You take that signal and you exit on the first profitable close or the first profitable open. In other words, you're not in the market long. And secondly, you don't have to make a determination of trend, which is vital if you're going to hold your position. So our TO3 turn signals, which are one of the first most basic things we started with, they have a win percent of about 75, 76%, maybe a little more. Our TO3 plus signals have a win rate of around 84%. And both of those are fairly short-term holdings, 1 to 3 days in most cases. 1 day for the TO3s exit first profitable close. For the Danielcode time signals, you're in the market almost all the time. That's your job. Once I've taught it to you, your job is to be in the market, because that's how you make the money. And the win rate of that is 52 to 62%. But that's the wrong question. What's the win rate? The better question is, how much money does it make? And we are in the business of trading. Our sole purpose is to make money. And if you are making more money than anyone else, you obviously have a superior system. And I sincerely believe and that the Danielcode is the best trading system in the world by a very, very long way. I've actually never heard anyone suggest that you can make multi-100% annual returns trading futures. So far as I know, it's the Danielcode time signals only and exclusively that do that. Okay, so let's move on now a bit and see how you went this week. Now, I'm showing you something a bit different here, folks. You can see wrapped around the bars, this is actually natural gas. You can see we've had 4 terrific trades here. The rundown was 5,200. The rally back up 2,400. The next leg down 2,000. And it's just been one day up for $360 today. What I've done here is I put around the outside of those bars a 2-bar stop. That line represents the highest high and the lowest low of the last 2 bars. Now, as I told you recently, the 2-bar stop is the most popular stop in the market. It's the most commonly used protective stop in futures and forex trading. And this line is showing you where that is. And it's actually uncannily accurate. If you can see, I'll just get a tool here to show you. Here we are, here's Spotlight. If you look at this high here, this outside bar, that looks like it went up to the 2-bar stop, it did. Exactly to the tick. In other words, because we use a 2-tick buffer above or below entry points, we wouldn't have got filled. But it shows you this market knows exactly what a 2-bar stop is and knows when it's going to trigger it, as it did down here. And there's something else in here that's particularly interesting. Right here on this bar here, you had a breakout, a wild breakout from the low. This was on a TO3 plus signal, and you had a close way outside. This is a 2-bar, so this is not exactly what I should be talking about. I should be doing this showing you a 3-bar high-low. But this close outside, way outside the 2 or 3-bar, 3-bar is the one you should be looking at, highest high, lowest low. That in itself becomes a setup bar, which is very predictive about what's going to happen in the future. And you can see the very next bar was a inside bar, a big down inside bar that didn't go all the way because you got a big gap underneath that up bar there. So what that's doing is that's rejecting the up move. Now remember, all of these assertions about what the market is doing apply only to the last day of the data, because it can change tomorrow. And you can see down here that was telling you you're going to have a failure of that up move, and here's where you got it down here, which ran right down into the belly of the green dash there underneath the big up bar, which is telling you there's a gap, a very big gap. Actually looking at this, yep, it's pretty straightforward. The chart low of this big bar here, if the chart low is greater than the previous day's close, then the true low is the previous day's close. Sounds weird, but think about it. This is where the market closed the day before. It had to move all the way up to this open here and then keep going, and that's what it did. So the true low is actually down at this close here. So if you were taking a sell of the inside bar and you didn't know much about trading, you got short there and it just lasted long enough to get you nice and short, and then it cut your head off a couple of days later. What we would have done, and what we do all the time, is all of our signals require an entry at the true high or true low, and the word true means that it accounts for gaps. In other words, there's a gap down, here's a little gap up, and the other side of that rule says if the chart low is greater than the previous day's close, then the true low is the previous day's close. Bear that in mind, folks. It's very important. You'll see many instances of people getting sucked into a trade, not realizing that what they're really doing, what this turkey here was doing, looked scary, didn't it? But really what he was doing was trading an inside bar. Okay, let's move on. And we shall go back to our normal tool here. Here we are. This is what happened to you today, folks. This was T-bonds, and I haven't put the dollars on here. You can sort it out yourself. And you can see we had a TO3 buy signal that effectively went straight up to 122.14, 2 ticks below the blue line to 122.16. That set up a TO3 sell signal, which was elected the next day. By elected, I mean that when we have a signal, we have two things that go with it, three things in fact. We'll tell you whether it was a buy or a sell. We'll tell you the exact entry point where your entry should be, and we'll also tell you where your initial stop loss should be. And once you've got those answers in your head, you can be quite safe and comfortable and confident with your trading. You can see here this TO3 sell signal, the latest one, gave you a really nice whoosh-o. It looked interesting. Today it looked really good. A special note about the Danielcode black lines. You can see there's two of them down there. One's at 110.21. The other one's at, no, it's the only one, 110.21. The other one's lower at 117. Danielcode black lines, apart from being simple support and resistance like all of the other Danielcode retracements, have a particular capacity that this market is to go any lower, it has to close below that black line. Not trade below it, close below it, and that's why it's different to the other retracement tools. So whenever you see these black lines on these charts, have a look at them. Watch how markets react. Look at this one. It stuck its head down, full of vigor, full of vim, full of violence, being cheered on by the Fed. What happened? 2 or 3 ticks above the black line, that's it. It's gathering itself. It may go right through today. I don't know. Which for you guys is tomorrow. You have to remember, I'm on Friday morning time down here where it's 20 past 11. Which is late summer for us. Hasn't quite really switched to early autumn, but weather here is so beautiful. Here I am in short sleeves sitting here, and shorts as well, with my wonderful hairy legs, as my children say. Okay. Things to learn. Watch those black lines. If this is to go lower, it must close below that black line. Okay. Very important. And let's have a look at your next bit of trading today. Crude oil. Simple TO3 plus buy signal. The TO3 signals are all turn signals, and they are against the apparent trend. The TO3 plus signals have all of those TO3 signals, and in addition, they have some trend continuation signals. As you can see, this market, this trend was up all the way into here. This was a correction. Now it's gone back to trend. That was a buy 2 ticks above the high. It didn't look very flash the first day, did it? But your stop's either below the low or 1 29-day ATR from entry, as you prefer. But then look what happened. That came all the way down just to frighten enough people to get out of the trade, and then it went whoosh. That's how markets work. Markets move up to resistance and down to support, but before you get a big fast move, they'll work really hard to get as many people wrong as they can, and that's the job of markets. For us, I don't say we're never wrong, but it's been a fair while. and that's because we have multiple options in a trade. We might even get to look at a flick me today. They've been pretty dominant in trading lately. So there was your TO3 plus buy signal. It's a key reversal bar. It's not actually a key reversal bar. It acts like a key reversal bar, but it might be a key reversal bar. Those conditions require, yes it is, an open within the range of the previous day's bar. The bar goes down, makes a new low, then reverses and closes above its own open and above the previous day's close. That's the definition of a key reversal bar. And you got the opposite of that the very next day. The downward facing reversed key reversal bar, the rule is it should open within the range of the previous bar, which it does. It should go up to make a new high for the move, which it does. It should then reverse and close below its own open and below the previous day's close, which is what it does. And we used to think to some extent, we still do think that key reversal bars are directional bars. And you can see here one was and one wasn't. So not such quite a dominant picture as it used to be many years ago, where it was a tool with some following. Anyway, once it got itself settled, off it went. 3 bars, big roar up today, and most importantly, it wiped straight through the first black line at 80.40, and today's close was above 81.06, which was the next black line. That means that not only is the trend up, it's got further to go in all probability. Okay. Hope you're enjoying this and counting your money, folks. Took me a while this morning, I can tell you. This is the S&P, all the equities with the exception of the Russell. They're having a battle. They've got massive buying power under them, all sorts of massive support, etc. And they've been range trading with the occasional breakout. Have a look at this. We got our TO3 sell. It was a TO3 plus sell, went down. Next bar did nothing, just sat there, but the close was up near the high, which wasn't very inspiring for the downward move. The very next day, to excuse me, folks, a little bit of hay fever here. The next day we had a TO3 plus correlated buy. What does that mean? It means we had a TO3 plus buy in one of the other equities, Russell, NASDAQ, Dow, and Germany's DAX, DAX futures contract. And those markets were also highly correlated that a signal for any one of them can be executed in any other, provided that the trade is elected. So up it went, small reversal bar, not knowing what it was doing, little down bar today, but still no real commitment. You can see where the close was, right in the middle of the bar. But this is not the best market to be trading at the moment. There are many other worthwhile. This is gold, folks. We had a TO3 plus buy signal right at the low that ran up for 1, 2, 3, 4, 5 days. Then we had a TO3 and a TO3 plus and a 6S signal, which then started this whole run up going. And it ran up. You can see where I put the arrow there to show you the TO3 and blue line sell all originated by the market closing within 0.1% of the blue line at 21.86. Not 1%, 0.1% or 1/10 of 1%. And that's actually very hard for markets to do. You must, if you're not familiar with the term target recognition, please do look at some of my previous webinars. We've been doing them for a long time, and there are many, many, many of them on YouTube. All of them will teach you something, I hope. And from there we had a TO3 and a blue line cell set up by that almost perfect target recognition at 2186. Wonderful stuff. Down it went, 3 days down, or 2.5 if you like, and there's where we are. We made 2200 on the first up trade. We then had a bit of a scramble around with a downward facing outside bar, then an upward facing outside bar. Eventually we got long at the right bar that gave us 13,300 odd up into the high where we got our next sell signal, 1,300 in the down move, and we're short there. This is mighty copper. Take a few minutes to look at this chart, please. We start off with a TO3 and blue line sell that runs down for $4,200 worth. We then have a little up bar that goes nowhere. We have a time sell that pushes it down 1 day only, and that day creates a 6S and a time buy, which runs this up. What I'm showing you today is how you can use all of your trading knowledge and all of your trading skills to be in the market all the time, making money, and you will not get hurt if you manage your trades the way I tell you to. You will have losses, of course you will. We have lots of losses. That's not the point. They're not damaging losses. We don't ever risk more than 1 or 1.5 at the absolute ATR, which is average true range, taken over 29 days. We had the nice run up for 3,400, then a short for 5,800, then a bit of a squibble over ups and downs. We had a TO3 plus sell, most importantly, because what that does, the high of that bar sets up the flip me buy. In other words, these Danielcode time cycles and trading signals are so powerful that when I give them to you, you will always have an entry point and the initial stop loss, which is the failure point. If that failing point is taken out, it's telling you you're wrong. And if you're wrong, you have to do something about it. In this case, you had to get long. So you get long at the flip me point. That's not quite accurate. It should be a little bit higher than where I pointed it. There was a sell quite right at the high of that little cell where it says TO3 plus sell. You get long there and then the market runs up. Then you run into another TO3 sell and you get exactly the same thing. 2 bars later, it's taken out the high of the setup bar, and that's a flip me. You get long again. So you're long into the close today for $2,700. Very important that you understand that you have a grasp on all of the Danielcode rules. Okay, this is the Russell 2000. Which I'm showing you because it was a nice trade, with $1,800, and this is only $5 a tick, so it was pretty nice. Interestingly, look where it's closed. It's closed right on the 2058 red line exactly. Interesting stuff. It hasn't shown any great emotion to run down. That close way off the low is less than bearish, but compared to what the other markets did today, it's certainly telling us that the small caps are a lot weaker. And it's worth knowing and thinking about which are the strongest and the weakest of the equities, because, as I've told you, you can execute any signal on the equities in any other. This Russell actually had its sell signal 4 days ago, and it's showing us $1,800 at the moment. Here's magnificent soybeans. We had a TO3 buy. We had a first TO3 buy right down that 1290 caret zero. That little arrowhead's called caret, C-A-R-E-T. Nice TO3 buy signal after the first pullback. Big run up, 2100. Really lost momentum today, didn't it? There's not a pretty bar to be looking at if you think this is going higher. But it did get through the 1204 caret 2 black line. Today it was facing a couple of blue lines, and then the black line at 1219, it might be 1221 actually, is sitting there above it. Nice trade, and that should be in your account. This is correlated silver. What do I mean by that? Well, in the same way as all of the equities are so correlated, the signal for any one of them can be taken in any other. gold and silver are also so correlated that a signal in any one can be traded in the other should the trade be elected, which it was. This is a correlated sell signal, the first signal you can see on here. We had a $2,400 run up on a TO3 plus signal, and then we've had a 2,300 run down on the correlated sell signal. From the bottom, another TO3 plus buy signal. Up it went, 5,500, stopped out with that outside bar, and you got long at the close of it. If you had wanted to use a 2-bar stop, as I showed you earlier today, you wouldn't have got stopped out on that outside bar. You could have waited for your new signal, which was a TO3 and blue line sell signal. Okay, folks, so you want to be a trader. This link here, I'll leave this up for a moment or two so you can write it down. It will be up on the website an hour afterwards under that new banner of Let's Have a Chat. But this is the video that we did some months ago with Scott and Amy doing their report after they'd done halfway through their Danielcode trading tutorial. And in here we also heard from Mark L., Greg Palladini, and others, some of our super traders. So have a look at that when you get a chance. It's interesting. It's your aspiration should be to know Danielcode time trading, and you can make the big bucks like these guys have done. Okay, free trials, folks. If you haven't already had a free trial, please help yourself. Go to www.thedanielcode.com. Click the register button. Any problems, contact Terry at support@thedanielcode.com. That's Terry at support@thedanielcode.com, and he will set you up. This is our standard disclaimer, which you see on all of our broadcasts or webinars, and I do urge you to take it seriously. It is very, very easy to lose all of your money trading futures or Forex if you don't know what you're doing. At the same time, it's equally easy to make a lot of money quickly if you do know what you're doing. So it certainly behoves you to learn trading Danielcode time. And that is it for today, folks. I'm delighted to have had you with me today, all of you. A lot of you came in late today. I gave you a couple of minutes at the start, but there are plenty of you coming late. Wonderful to have you with us, folks. I'm off the clock, and now it's 11:30 on Friday morning down here. So I'm pretty much finished for the week. You've still got a day's trading to go, as have I, and then enjoy your weekend. Thank you for being with me, and do have a look at the website in an hour or so when Terry will have that new contact me, let's have a chat banner up. And if you'd like to have a chat, just send me an email. We'll set it up. Bye-bye for now. I hope you've enjoyed today's webinar, and I thank you for being with me. Goodbye.